Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys. So let's take a look again on euro currency. It actually was important trading session recently. As you can see, the Fed statement has exceeded even most brave expectations. Yesterday we said that even flat Fed statement probably after minor bullish reaction, minor upward reaction, then leads to downside reversal and downside continuation to our supposed 120.50 support. But yesterday Fed stunned markets with a surprise statement that they see rising inflation, although they keep talking about the transitory future of this inflation pressure, and announced that the first rate hike for the quarter point could happen in 2023. So in fact, with this statement it tells nothing new, because everybody in general already have expected the rate rise in 2023. This is first. Second, they have said previously many times that hardly the rate will be changed until 2023. But this mostly, I suppose, emotional reaction on the market, not because market has got some new information, but just because it stands not with the expectations of the market. Just because market hasn't expected that Fed will tell this. That has led to the downside action. So currently, guys, the market is coming to very important points from the perspective of the major trend, long-term trend on the market. We talked about this in the weekly report, and here you can see how important this level is. So this is actually the subject for our weekly report, and we definitely will discuss this moment. But in two words, let's take a look. Previously we talked about the hand and shoulders. Here, this market stands right now around right arm bottom. Second, market is coming to the previous top. You understand that if market will break it down, it means that market will drop below the bottom of the head. This in turn will mean the double top on the market here. And that might be the starting of the long-term trend that we discussed in our weekly reports for a few months probably. So that's why this level is really have special meaning for euro currency. Based on the performance, it's of course not good when we have the hand shoulders and right to the bottom of the arm, market is showing just collapse. So this is not good for a bullish pattern. And another question that we have here is what factors could force euro to turn up? What could push market to the upside again? Only some bad statistics probably, and some steps from the European Central Bank, if they will do something to challenge the Fed in terms of the rate policy. But well, if statistics looks reasonable and probably could get some relief in June, in summer months. Speaking about the European Central Bank, hardly will get some more hawkish comments because they already have said that they even will not think about the changing of the rate or do something until 2023 as well. So that's why overall context here is becoming more bearish on the market. Long-term context becoming more bearish. Now let's take a look what we have in the shorter term, what we could do currently. First of all, take a look that the divergence is worked properly. This market has dropped below these lows. Of course, currently we will not talk about the taking the long position on the daily chart. Right here on the intraday chart, this is possible, but on the daily, let's take a look what has happened. Market has dropped for the confluence support. Does it no longer exist? And mostly the daily reversal has stopped it. It means that in the shorter term, in the intraday charts, we could get the pullback. But in the longer term, downside action could continue. Because currently, this is new reality from the Fed, and just bring markets in the environment of the changing policy. So they just signals that the changing of the policy is started. So that, of course, leads market to rethinking of current situation and what they intend to do in the nearest future. So on the 4 time frame chart, I see that it might be, for example, something of that sort. We could get the hand and shoulders if, of course, market will be strong enough to show the pullback, maybe some reaction on the oversold area. I'm not excluding the chance that market could form smaller right shoulder, not as far as this one. It's around 2150, but it might be small somewhere to the 2080, 2095, because actually broken confluence stands around 2040, 2050, 2060. And retesting of the broken confluence, that it has been broken without any respect, is a typical feature for the market. This happens very often. So I'm not excluding the chance the market could show the pullback. If here will be clear bearish pattern, I think that we could consider taking the short position. Currently on the bottom, it is possible to consider taking the long position based on the oversold area. As market stands in the head and shoulders, and theoretically from the neckline, it might be the pullback. But currently, guys, unfortunately, I do not see something really special on the hourly chart. So we have to just collapse here and nothing else. So if you will get here some bullish patterns, that's possible to consider taking the position with the target around 2050, 2060 probably. So, but it will be a very short-term trade. I'm not sure that it will be possible to cover it in our daily updates. It's just will be finished very fast. So mostly we are watching for two things currently. First is a pullback here, and then we consider maybe taking the short position with a possible downward continuation, because recent statement from the Fed stands not in a row with the information that the market have expected to get, or expecting to get. So, and that changes the overall environment. And in the current new environment, well, I do not see yet the context for taking the long position by far, at least on the daily chart. So let's see what will happen and how market will react on the new statistics in the next week and in general next month. But currently it seems that the downward action might be a bit deeper. And second, as I said, it's really big question what the factors could force euro to turn up again. It's really difficult to suggest what particular driving factors euro could get. So that's our short-term view on euro currency.